Good afternoon, everyone, and welcome to today's FinXTech Exchange. I'm Lexi Grindstaff, and I am the Director of Business Development here at Bank Director, and we want to thank you for joining us today. This payment-focused FinXTech Exchange is brought to you by Bank Director and is sponsored by Autobooks, Finzly, Payrails, and Strategic Resource Management. Now, before we get into today's discussion, I do have just a few housekeeping notes to go over. So first of which, you have joined this event in listen-only mode, so you are automatically muted. For a better viewing experience today, we recommend that you use the slide bar at the bottom of your screen to make the presenters in full screen mode. Finally, additionally, I should say, we encourage you to ask questions throughout the webinar. So if at any time, if you have a question and you want to submit, go ahead and use the Q&A button found on the right side of your screen, and we will try to get to as many questions as we can. There is no need to take detailed notes today. This session will be recorded and sent out within 24 hours via email, and we will also post it to bankdirector.com. And throughout the presentation, if you have any technical issues, just be sure to use the moderator chat feature on the right-hand side of the screen, and we will do our best to take care of you. So after all of that, we can really get into today's discussion. So I'm going to go ahead and introduce each of our panelists, and as I do, I will ask them to come on the screen so we can really put faces with names today. So the first member of our panel is Fran Duggan. Fran is the CEO of Payrails. Payrails creates smarter payment experiences for the financial services industry. Hi, Fran.
Hey, good afternoon.
Next with us, we have Bhushan Ranachari, who is the founder and CEO at Finzly. Finzly connects FIs with customers through a modern digital experience and an efficient real-time payment solution. Good afternoon, Bhushan.
Good afternoon, everyone.
Next with us today, we have Larry Pruss, SVP of Project Management at Strategic Resource Management. SRM helps financial institutions add value to their bottom line in areas such as payments, digital transformation, core processing, artificial intelligence, and operational efficiency. Welcome, Larry.
Good afternoon.
And last but not least, we have Derek Sutton, the Vice President of Marketing at Autobooks. Autobooks is a Detroit-based fintech which helps small businesses send digital invoices and accept online payments directly through their financial institutions. Welcome, Derek.
Thanks, Lexi. Thanks for having us.
Of course. So I have lots of questions here. I will be looking at my notes every so often to make sure we cover everything. So I say we just dive right in. And Fran, I'm going to go ahead and start with you. So it's no secret today that customers are really demanding more personalized experiences tailored to their specific needs. So when it comes to payments, what can banks do to help meet this demand?
Sure, thank you for the question. I think what you said is very important, that when you talk about the experiences people are expecting or demanding, there was a survey done that showed, over 2/3 of survey respondents were looking from their bank for an Amazon personal shopper type of experience. And what they noted was they wanted that advice, didn't know where to start, and wanted some proactive capability with their institution in the digital space. So how does that relate to payments? Well, when you look at payments, it's the number one thing that consumers are doing with their financial institution. Right? I mean, either you're buying stuff, moving money, things around that. So that experience, how easy you make it for those folks is going to be a huge driver in whether they use you or an alternative, be that another bank or a third-party provider. We talk a lot about the Venmos of the world, and when you look functionality-wise, what does Venmo do? They just make it simple. We as an industry have struggled with that, frankly. And so now you're going to look at Amazon as the standard, and we have to just kind of rethink how we make payments. It's not just the transaction, it's the experience that goes along with it.
That's great. Thanks, Fran. And building off of that, Derek, from your perspective, what's something that's often overlooked or maybe underrepresented during product selection and go-to-market by FIs?
Yeah, so I think, what Fran talked about, it's building experiences, making it simple for people to use the application. But what I find the disconnect in FIs today is you'll go do integration of a great solution like Payrails. But the way you connect that back to the end customer is often there's a big disconnect because a digital team will work with the product or the agency to integrate the solution, but there's no big marketing event. There's no training. There's no customer outreach done to go promote that feature. So if you think about the competition being Amazon, Square, PayPal of the world, they're the best at digital marketing as well. So not only do they have great products, but they have really good digital marketing. And they're consistently educating end consumers, hitting them in all channels. And what I find at financial institutions is there's a big resistance to actually go to market. So we build these great solutions, we integrate them inside the FI, but yet we're reluctant to tell end users about the value add that we provide as an organization because we're afraid of marketing or too much communication. Well, you know who's not afraid to communicate to those people? Everybody competing with you in stealing away payments and engagement with your financial institution. So that's the biggest disconnect. Like, market, it's okay. Tell people about the value that you add as a financial institution.
Yeah, no, I think that's a great point that is a big challenge and disconnect. Bhushan, I'm going to look to you. So from your perspective, what do you see as the biggest challenge to community banks when it comes to payment transformation programs? And then how can banks combat that challenge?
Yeah, I think when it comes to the challenge, the way that we are seeing in the experiences that we have with several banks is that the dependency, the core dependencies, right, that they have, which is built for 30, 40 years ago, which was good for at the time, but not anymore good for the current market. So in order for them to innovate, in order for them to compete with the likes of Venmos and Amazon, the expectations are high. And they want to provide that better experience, right? And but the solutions today that we are offering is that we don't have to rely on that anymore. So the core dependency is gone. You don't have to rely on that core. You can certainly innovate outside of that core in parallel with several cloud-based technologies, and still offer that great experience to the customers. And then the other one is, they don't have to rely on the core providers again. There are several industry experts, there are different providers in different segments, Autobooks here, Payrails within this group, and then FinXTech for payment innovation, RTPs. So there are different solutions that are available. I think they can just go after and just get it, and no more dependency on, the access to the technology. Earlier, if you look at it, the bigger banks, they are the one who had all the great solutions, and the community banks, they totally relied on core providers. Now that's not the case anymore. Most of the solutions are available in the cloud, and the community banks, they can go and easily access them through a lot of partnerships and vendor relationships.
So I'll stay with you for a minute, Bhushan. With those partnerships and relationships, do you think that payment monetization opens up new revenue streams with fintech partnerships? Absolutely.
So, with what happens is, today, with the zero interest rate, right, there is not much revenue that is coming from that one. And the demand for the loan is also not that great, right? So banks are looking for more revenue channels in terms of the fee income. The trend that we are seeing here is there is a lot of competition in terms of the fee income, and a lot of the fintechs, they don't even charge fees. How the banks can compete with the fintechs? So the per transaction fee that they enjoyed earlier with higher fees is drastically coming down, but at the same time, the banks are also seeing a higher volume of payments, because when you start competing with the fintechs in providing a lesser competitive rate, then it's going to encourage your customers bring more business to you. So basically, the banks will see a lesser transaction fee but higher volume, and also by partnering with fintechs. Like, for example, we are working with a bank, and they are offering open banking APIs, and these customers, they can initiate payments, they can initiate debit requests, ACH debits, and also they can send files. So what happens is, through this fintech one partner relationship, the bank is opening up a huge volume of incoming payments. and also a lot of debit requests that is going to go through the banks. So now all they are doing is this, bringing one channel and opening up maybe 100, 200, 300,000 customers, and it's just going to increase their revenue stream. So it's not the same fundamental direct customer relationship they had before, but the fintech relationships certainly bring a lot of revenue channel for the banks.
Thank you for that. Yeah, I think that's a great point. Now, Larry, I am curious to get your perspectives and your thoughts on contactless payments. Do you think that this is something that is here to stay?
Yeah, absolutely. A lot of other countries, contactless payments are the norm. Overall usage of contactless payments in the U.S. has risen about 150% since March of 2019, which is about the time when the pandemic was at its high. Seen nearly 83% of customers have said that they used a contactless card in the last 12 months. Many of them using contactless cards for the first time during the COVID crisis. There's also a survey published by National Retail Federation, Forrester, back in 2020. They found that 67% of merchants now accept some form of contactless payment, including mobile payments and contactless cards. So it's definitely readily accepted. They're fast, it's clean, it's secure. There's really little downside risk or except maybe a bit more cost on the plastics. And then there's generally some integration work to do with your processor. But yeah, I'd say contactless is quickly becoming the norm. And then once people get used to them, those cards that are not contactless run the risk of losing any preference with the customer. So we've been encouraging all of our clients to move to contactless if they're not. And there's often funding available either from the processor or from their network partners. But good question.
Thank you for that. And in the same vein, looking at P2P solutions. So we've already mentioned Venmo multiple times. Fran, do you think that it makes sense for a financial institution to implement an in-house P2P solution?
When you say in-house, I don't think necessarily building your own, but offering a bank-centric solution, absolutely. I think, what I really push forward with is what they call an open loop design, which is kind of what Payrailz offers. In other words, traditionally the Venmo, you have the Venmos, you have the Zells, and you have PayPals, and you have Square Cash. So now when I have to pay 5 friends, I've got to go onto 5 different services. That is becoming a huge pain point. Wouldn't it be better as if my bank took care of that for me and just said, who do you want to pay? And the bank should route the payments appropriately. So I'm a huge believer in what we call open loop. Just like when you write a check, you don't have to worry about where the person you're giving the check to is going to deposit it or where they're going to cash it. You take care of your side, let the recipient take care of their half. And I think there's been too much of this closed loop feeling, which is going to, I believe, break down because more of these solutions are popping up. So I definitely believe banks should own the transactions. There's a time when people say, well, maybe, we've lost to Venmo and we've lost to this. I don't think you have. I really believe as an industry, that's a defeatist attitude that really people want their bank to be their center of their financial lives. But we as an industry need to offer the solutions that they're looking for. You can't say that it's 3 days to move the money when Amazon can have the TV installed in my house this afternoon. That's just crazy. So we've waited 50 years while we're finally trying to modernize an ACH platform that was 1970, as was brought up earlier. So P2P is that same thing. Don't give it away. They'd rather do it through you, but we just make it too difficult. Back to that experience and what Derek says about marketing it. It's almost like we're afraid to tell people we have the solution. Contactless payments, all those things people want, but we need to step up and offer them, frankly.
Well, and I'll ask you to elaborate a little bit more on the experience side. So what are some steps that the banks could take to ensure their customers are having the best experience, especially when it comes to payment? So
I'll give you the quick example. You go out with 5 friends, the typical example, and you're gonna say, okay, I'll pay you folks all, I owe you all $20 for some reason, reimbursing you for the trip that we didn't go on. What's wrong with just going into my bank, selecting my 5 friends from my contact list, and say, pay them $20, and you're done. That's the experience. You didn't have to sign up for it. You didn't have to enter somebody else's financial information. You didn't have to enter your own financial information. It's part of what your bank offers. It's just sitting right there. I just say, oh, pay my friends. I pick 5 from my contact list that you have right on your phone and say, pay. Tell them how much you want to pay. That's a different experience than saying, oh, well, for Derek, he's a Venmo user, and you know, you're a Zelle user, so now you're 20. We got to make it simpler. And so that's a solution, for instance, that, you know, like Payrailz provide. So it's a different thinking of our traditional stovepiped or trying to catch up. We need to leapfrog the solutions that are out there and rethink the experience from the user's perspective. Not from, oh, here's a stovepipe, let me throw that at you, let me throw this at you, and you decide whether you want to use ACH or RTP, or I just want to pay Derek his $10. Make it easy for me. So our solution simply is say, pick Derek's name, type in $10. You're done. No setup required, no things to pick, no anything else. That's simple.
Yeah, I think I'll just add on that too. I know you didn't ask me, Lexi, but I can't help it. So I think what banks need to wrap their mind around is like controlling payments and how money is moved it's the new way forward. So like we used to really focus on being, as a banker, you were centered in a geographic location and everybody came to you. And the direct depository relationship was the way to like start the relationship, control the relationship, because if you had the direct deposit, then electronically money just moved into the bank. And then from there, you created the ability for them to deposit through cash deposits, check deposits, et cetera, et cetera. As the world moved online and digitally, the banking industry didn't keep up with the money movement side of digitally enablement of money movement. And we abdicated that and lost it to PayPal, Venmo, everybody. And we're playing catch up. And so now they're controlling the day-to-day movement of money, both consumer and businesses, and the banks have lost it. And so once these vendors have used the tip of the spear to get the user in their app to control how money's moved, now they're layering in other banking products that compete with financial institutions. And so if you want to go back in and compete, consumer or business side, you have to do what Fran said. You have to implement a system that's just easy to say, okay, I'm going to take back control, either as a consumer or a business. So we did a survey with Cornerstone, and the average number of ways that businesses get paid is 9. So between, Cash App, Venmo, Facebook Messenger, all these different ways, cash deposits, they're getting paid in all these different ways. And you know who's control of it? Their customer, right? They're going to the customer, they're saying, I'm doing this service. And the customer's saying, do you accept Venmo? Do you accept PayPal? Like there's no control for the business owner because the bank hasn't enabled them to control that narrative anymore. And so I think we have to get back in front of payments if we want to get back in front of these relationships and forget about, the controlling of the checking, the ADA number and the routing number. Like that's all table stakes. We got to get back in front of payments for financial institutions.
Yeah, I think that's really important. And something else that I think has really built upon customer experience in the realm of payments is mobile wallets. So Larry, based on what you've been seeing there, do you think that these will continue to gain traction? And if so, what do you think that these could become?
I do. I might add on something Derek was saying there in regards to FIs kind of taking back those rails. One of the things about P2P payments, although 8 in 10 U.S. customers have tried P2P technology, about a half of them weren't even aware if their FI offered a P2P solution, suggesting that really people are using third-party apps for their P2P solutions. So just wanted to touch on that because Derek had mentioned it. In regards to mobile wallets, and will they gain traction? What will they become? In the U.S., in-store mobile payment apps hit a milestone by 2021, reaching about 100 million users. That comes after almost a 30% year-over-year growth in 2020. Right now, it's projected that more than half of the world's population will use mobile wallets by 2025. That's a huge number. Well, most are probably familiar with the Pays, Apples, Google, Samsung. A number of others are popular in the U.S., including PayPal, Venmo, Cash App, which were announced or mentioned earlier. Then internationally, there's names like M-Peso, Alipay, and WeChat are popular. And then worldwide, actually in 2019, mobile wallets overtook credit cards as being the most widely used payment type globally. And then the shift to online driven by the pandemic really accelerated that adoption. So they're here. In terms of what they might become, outside of probably the future predominant payment mechanism, a number of mobile wallets have also added crypto trading usage to their functionality. So those include PayPal, Cash App, and even Apple started to hire crypto experts, with some market analysts thinking that they might enable crypto as a payment solution. So payments are changing. Mobile wallets are certainly going to be part of that. And in the future, it's just going to be additional payment mechanisms added to those mobile wallets.
Well, Larry, you brought up a very buzzy word, cryptocurrency. That's something that's just growing in popularity. Do you see a threat with cryptocurrency, decentralized finance? What does that pose to traditional finance?
Yeah, for sure there's a threat and probably some opportunity as well. Today's situation really reminds me of kind of a race that's already 3/4 of the way over. A lot of participants, in this case, the banks aren't even aware the race started. I'll give you an example. Today, I can, with like less than 5 clicks of my mobile phone, transfer money out of my bank account into my crypto wallet, convert those to a stable coin, which is a type of crypto, re-lend that $1,000 out or whatever amount I wanted to do as an over-collateralized lending pool, get 3 to 4% annual yield, and I can cancel that contract at any time because it's over-collateralized. It's fairly low risk. Compare that to the effort of kind of a traditional getting a CD that would return at best, like 0.5% APR, and your money's locked up for the term. So it's a real threat. And then crypto and kind of broader decentralized finance, what we call DeFi or open finance, is really starting to compete with traditional banking solutions. Just because you may not be aware of it doesn't mean that it's not happening. We've got people that are starting to engage in borrowing, lending, trading, even insurance type activities, all in a peer-to-peer setting. So I'd say, don't estimate it as a threat. You're really competing with an industry that don't have any CEOs, no fancy marketing or offices, no regulations, no borders, no limits. Yet it's really supported by community, tens of thousands of active developers using open source software solutions, and they're focused on taking the bank's business. Community's really created a $1.4 trillion market in less than 12 years, and DeFi and open finance has grown from about 700 million to about 100 billion in less than a year. So again, definitely a threat.
Yeah, so I think to add on to what Larry just said there for Bitcoin and crypto in general. So when you think about these open source systems, I think what banks have to wrap their mind around is the power of the community and the network. And so for Bitcoin specifically, what he's saying, 10 to 12,000 developers, like Bitcoin has more people working on it as an open protocol than Visa does. Okay, that's what you're competing against. People around the world globally, like working on these open monetary systems. I think it will start from the bottom up because it's like water. As water, it's going to find the lowest point, the least resistance. Remittances are going to completely be wiped out in the U.S. economy. So, protocols like Lightning on top of Bitcoin and others are going to basically lower the margin and the lower point of entry for remittances. Those fees, international wires will effectively go away at the lower end of the market, because if you're in El Salvador, somebody moved away and they're remitting money back, 25% of the economy at El Salvador is through remittances. If I need to send back $750, to a family member, if I charge a $50 fee on that, those are very onerous fees that start to get taken out of that economy equation. If I can do that on the Lightning Network for basically 2 cents and get it in real time to somebody's wallet, that's basically going to wipe out international remittances. I think companies like Western Union are going to go away because of this, first and foremost. But I think that's where the bottoms up is going to start. The next click, it's just like with anything with payments. Once you get that, then layering in the lending, the other capabilities around that are going to start to creep in as well.
If I can piggyback on what Derek just said too, there's going to be a tendency for banks to want to develop this stuff internally. I'd say don't make that mistake. You cannot compete with those developers out there in the open community. And again, I saw open source code is constantly being hacked and constantly being modified and being strengthened, and there's no way to compete to that. So to the extent that banks try to develop those solutions themselves, they'll find them very quickly that those solutions are either inadequate or will get hacked and a fair amount of money lost. So look for partners in this business for sure.
Yeah, I think that's a good point. And Bhushan, I mean, we are seeing a lot of community banks that are trying to modernize their payment offerings to match up to some of these challenger banks, mega banks. What do you think is the primary reason how they're so nimble to adapt?
Yeah, I think that's a great question. The way the community banks operate is they are very sensitive to the customer needs. They really care about the customer, what the customer wants for, right? So they, the customers have a say. They listen to them, and based on that, they make quick decisions. So if you go to a bigger bank, the decisions making is not that fast. They're strategic. They take the decisions plan and much earlier. But the community banks, if they want to act, they act quickly, right? The kind of structure of people that you have to deal with is very limited. So that makes it easy. But other reason I would say in terms of the nimbleness, the reason they can innovate faster is because, as I said, they really don't have to, there are a lot of options available in the cloud technologies. Earlier, you have to rely only on the core. The dependency on the core is not there anymore. They realize that, and based on that, now they are looking to partner with, fintechs like many other fintechs. There is an ICB, a fintech, and there are funds that are initiated by several community banks. So all these things are making them to say, hey, we need to be part of that game. So yesterday I spoke with a banker. They said, hey, we need to show we are innovating, and they really want to do that. If they don't do that, they really see that there is no way they can continue to be competitive, continue to stay in that business just by doing the lending and deposits, right? They have to be part of that innovation that's happening all around the world. So that's one main reason. And the access to the technologies, earlier it was available only to bigger banks. Now everything is available to all the community banks, right? What we are doing is that we spoke with a bank. Right now we are working with a bank which is less than $1 billion asset size, less $500,000-$600,000 bank. Now they're a very big proponent of what we are doing mainly because they are able to offer banking as a service solution. They're able to offer payment as a service solution, and they're able to give a better experience not only for their customers but also for their associates. If you don't, when it comes to the payment, the way that we see is it's kind of a FedEx experience, right? You want to go and tell them where you want to go and how soon you want it to go. But when it comes to the payments today, you are dealing with ACH files. If you want to send the wires, go to this form. If you want to send the international wire, you go to the different form. So the kind of experience that we are giving is so not acceptable. So if you want to give that FedEx experience, you want to change the engines that you are dealing with. You have to change your payment engines, ACH engines and Fedwire engines. You need to see payment as just a money transfer. You shouldn't be seeing in terms of the ACH, you shouldn't be seeing like RTP. It's just a transferring money from one place to another place, right? Like many of our other friends in this panel said, you don't want to ask them to give your account number, routing number, all that stuff. Let them deal with it. So, the Fed now, the real-time payments that is coming up in Fed now, it's kind of making it it's going to enable more and more, user-friendly payment experience. And the banks needs to be part of that one. So today we have about over 100 banks participating in the pilot program, and we recently partnered with ICBA to make the real-time payments more accessible to all the banks. So if you look at it, the Zelle experience, if the community bank wanted to offer Zelle experience, we heard banks, they have been waiting for more than 2 years to get in that pipeline. Right. So, but that was again mainly because of the old way of doing things, mainframes and COBOL programs. But the cloud technology is making it much faster. So we are telling them you can launch new payment rails, RTPs, and Fedwires and FedNow, ACH, Open Banking API in 60 to 90 days. So that was not possible before. All these things are possible because of the cloud technology. And the faster decision making and their interest to be the innovative bank and serve their customers.
Thank you for that. Now, Derek, I'm going to turn to you. So a term that I'm seeing come up a lot is embedded fintech, coming up more and more. Can you describe this concept to our audience?
Sure. I think a lot of what we're talking about today, I would say, should start to fall under embedded fintech. And what I mean by that is you hear a lot about embedded banking, embedded payments, and that's where third-party companies like Amazon, Squares of the world, et cetera, they're partnering up with financial institutions and they're embedding banking services into their applications, so like DDA accounts and things of that nature. So if that's true, and if they can have success in onboarding users, remember using payments as the tip of the spear oftentimes to win that relationship, then I think the inverse of that is true for banks as well, where you can embed fintech back into your bank. And so, but I want to draw a clear designation between, well, what's the difference between partnerships and integrations that we've done in the past? Embedded fintech starts to feel like it's very seamless to the traditional banking experience. So it's beyond just a standard SSO or a basic integration. So it's everything from embedding the product into the banking experience so that it feels very complete to the end user. But it's also the onboarding, training, and go-to-market for the FI and for the end customer that takes place as well. And so one of the most important things that I think is if you look at a company like Autobooks, we specialize in small business banking. It's our job and role as a fintech provider to know more about small and micro business banking than any financial institution in the country possibly could. That's kind of the way we look at our role. We also drive as much research about small businesses. We want to understand intimately their needs, and then we want to build a solution for them that enables them to make progress in their day-to-day life as part of their banking experience. And so if that's what we do as a vendor, then as a financial institution, what we're asking is to embed all of our capabilities into your institution, our expertise, our knowledge about the customer, our go-to-market capabilities, the way that we do outreach, the way that we do onboarding of customers, the way that we follow up and do fulfillment. We're looking to activate users, not just email market to them one time. So it's part product, but a lot of it is also the go-to-market and the ongoing iteration of the product so that the financial institution can intimately retain the relationship and remain that center point. Because as I said earlier, if you don't do those things, then it's just another shingle that you're hanging that Bhushan's kind of talking about. Like it's just another department in the bank, just another feature, it's just another capability. Oh, you need that service, go over there. And it starts to feel fragmented. And users, as I said, they're like water. They're going to find the lowest point of resistance to move money or to do what they need on a day-to-day basis. If you don't make those things simple, if you don't educate them, and if you don't take the steps internally in your financial institution to remove barriers, then you're going to have a hard time competing on payments, I think, in this market.
Yeah, I echo that one. So, the embedded payments, one thing I would say is, for example, you're taking Uber ride. At the end of the ride, you never have to take your credit card or anything to pay. That's embedded. That payment is embedded in that experience. So when that is expected, that's the standard, right? That's the people are got used to that kind of experience. Now, if you go to if there are other businesses, that are served by the banks, if the businesses they want to embed that kind of experience in their applications or in their business, what do they have to do? So the bank should be able to offer this kind of products like Derek is, and and several other solutions. It has to, if they are not capable of it, and they are going to lose the customers. So if the banks needs to make the small businesses and enterprises become successful in offering that kind of embedded payment experience, that's when they can become that, the back-end payment and banking service providers to them.
Yeah, Lexi, we can just expand on that just a little bit because it's a great topic when we talk about that experience. And I like the way Bhushan said it. I often say the best payment experience is the Uber one because there's no experience. It's done for you. We use the term "do it for me" world we're all entering into where don't give me the capabilities to make the payment, just do it for me. The biggest thing you're going to get out of your payment solutions is the data. How is Amazon so successful? They know what you have, they know what your trends are, and they can proactively say, hey, you haven't ordered that dog food in a month, you probably need some, and you just say, yes, send me the dog food, right? Why can't we make our payments, and what I really say is our banking experiences just as simple? So the classic example is, based on when someone signs up for like their bill pay services. Well, we know what bills they have. We know when they like to pay them. We know when their direct deposit hits. Wouldn't you rather than getting a message that says, hey, you should pay your bills, wouldn't it be better to say, hey, Lexi, you have your bills coming due. Looks like you're going to be short, but you get paid on Thursday. How about we set up these bills to be paid for you on Thursday? And you simply say, yes, take care for me, that ABC Community Bank. That's what we call building a digital relationship in this new do-it-for-me world. That's when we talk about experiences, it's not prettier screens. Forget screens, you know. It's about how do I be with you every step in your life of what you're doing. And if you're paying your bills, you're buying that shirt, you're leaving the Uber ride, why can't my bank be right there saying, got it covered for you, Lexi, payment's all set? Because as somebody said earlier, all a payment is a debit and a credit. We have tons of rails and things behind the scenes. Users should never even have to understand those words. They're doing a debit and a credit. You, the institution, need to do it for them. So having that mechanism, which is one of the things, you know, like a Payrails does in terms of that smart routing capability, where don't worry about the rail. Where do you want it to go? I think Bhushan said it. What are you trying to do, and you know, when do you need to get it there? Let us take care of it for you. I think that mindset, as much as anything, that's the Amazon. When people say I want an Amazon experience, I don't have to think. It's doing it. Here's the 5 books, Frank, you're probably going to like. I just say, yep. I don't care. Does anybody care what their Uber ride costs? I can tell you most people have no clue. If you make it simple, you make it easy, you can make the money, but more importantly, you're going to have that relationship where today we're used to this stovepipe world, and what all these things we're talking about have shown us is you've got to change your mindset about what you do in the digital space. It's not an add-on channel to do transactions. That's not what it is. It's the primary relationship management tool you have is the digital interface. And that digital interface is not just screens. You know, voice comes into, all those things come into play. So anyway, you hit a hot spot with Bhushan, so I apologize for going off, but that's
No, and I think, Fran, too, you made a good point about all the data that is available, and it comes into, you know, how to use that, which is really important. So I'll take a quick pause here and just remind anyone tuning in, if you have questions for any of our panelists, you can submit those, and we'll take those as they come and as we have time. So we still have a little bit of time. Would love to tackle those. But Derek, I had something that I wanted to discuss with you, especially, you know, knowing all Autobooks does in the small business space, and there's been some recent news from Square and some of the additions that they're adding on. So would you mind just kind of getting us up to speed with some of those recent developments with Square, and then how concerned should FIs be when it comes to these online platforms?
Yeah, I'm very concerned. So I think if you look at all of the different departments and the user cohorts inside financial institutions, I think micro and small businesses is most likely to be disrupted. And I hate that word, but like literally be ripped out of the banking industry more so than consumer banking or commercial banking. So I think that there's an active migration of that already underway with the likes of PayPal business, with Shopify, with Square, with others. If you look at their user growth volume, the number of businesses and users that they're onboarding, it's mind-boggling. And you can go out to market and you can just look at companies like Bluevine, and you can look at Cabbages of the world, et cetera. They are all not only adding in a digital enablement of making it easier to accept a payment or to get a loan, but they now also offer bank account services as well. So Brex credit card, QuickBooks, everybody, Zero, like Wave, they all have business banking partners, banking as a service partners behind that with a real-time business debit card attached to it. Square is the first one that made the leap to actually formalize that into a legal financial institution. You can go out to their Twitter feed. You could follow the person that leads the group. They're hiring people every day to go build out business banking services. And so if I'm a financial institution, if I know that the world is moving online when it comes to accepting payments, which Larry talked about with mobile wallets, it is. Just go look at the Fed data. You can actually see it happening in the Fed report all the way from 2015 to now, slow and steady declining checks and cash and an increase in debit card usage. If you go look at the reports from last year at 2020, A 15x increase in the digital economy and money moving online, and the first ever decrease in physical retail sales happened last year. So what that tells us is everybody invested in digital cloud-enabled payments, including mobile wallets again. Those trends are not going to go away. It's like our grandmothers adopting Facebook. Once you get them on there, they don't go back. Like we don't go back to pen and paper. The world is moving to a digital economy, and the people ahead of that curve are those that have been doing that for the past several years. And they've won hundreds of millions of users, not only domestically, but globally. Now they're all going to build out banking services. They may not all become fully chartered financial institutions, but that doesn't matter. For a lot of individual users, that doesn't matter to them. As long as they have the ability to park the funds with an ABA or routing number and a real-time business debit card, that's all many people care about. And they want the convenience of moving that money back and forth and accepting customer payments in the case of a business owner. They also love it that you can, based upon historical data, as Fran talked about, offer one-click lending and things of that nature. So if I'm a financial institution, I'm seeing this happen, I beat my chest all the time talking about how I love small business banking and all we did in the PPP. Well, you know what? What helps business owners is helping them get paid. And if you can't help them effectively get paid, then it doesn't matter how much you truly care about the business owners in your community. If you can't help them close their problems of day sales outstanding and make it easy for them to get paid, then everything else doesn't matter. They're going to love you back, but they're going to go bank somewhere else. We talk to people all the time. They have personal, long-standing relationships with community financial institutions. But you know where they do their lending? Online. And you know why? Convenience, ease of use. A lot of times they actually don't want to even communicate physically to a banker about, like physically in person, about a hiccup in their business in a short time, like a short-term cash flow discrepancy. And so they like the anonymity and the one-click kind of anonymous side of one-click online lending to ask that request and to fund it when needed. And so they may have a personal banking relationship, and the personal banker's saying, "Oh, I'll bank this business," and we've got their business. Behind the scenes, they're doing all their lending through Fundbox, and the bank doesn't even know it. So it's a kind of a scary world out there for financial institutions a lot of time. If you actually look at the data, we see a shockingly amount of activity coming in from Square, PayPal, QuickBooks of the world, in and out of organizations. But I'll leave you with one data point. The scary part of that, though, is it's just the tip of the iceberg. So what we know definitively to be true is every deposit you see in a micro or small business account from Square, there's 7 others, 7 that hit the Square virtual account that never make it back financial institution. So just know that whenever you have that deposit coming in as an organization, that's a zombie account. Like it's walking around, you think that it's a full person, it's a zombie. And I call it a zombie because it's like half dead. It's more than half dead because most of their activity is taking place virtually, and they're not depositing back to the financial institution because Square charges them a fee or does the delay of the transaction. So they just leave in their virtual account. They spend from there. The only thing they're transferring back is to meet the minimum balance requirement that you have to avoid a fee. So it's underway. It's scary. Partner up with Payrails or Finsley or somebody like us to go help combat that problem.
And I think that'll be a great point to continue on in the peer exchanges, which we're about to hop over to and kind of continue that conversation. But I think we have time for one more question. Larry, I'm going to look to you just with all of the big topics we've covered today, cryptocurrency, mobile wallets, P2P payments. Can you give us a prediction? What do you think traditional banks are going to look like in 5 years?
So I'd say they're going to look a lot like software companies. Becoming more digital is really the only effective way to compete with the FinTechs and the DeFis of the world, which are increasingly using software to connect lenders and borrowers. Bhushan mentioned Uber. I think it was Bhushan mentioned Uber. I mean, technology is allowing the elimination of all intermediaries, and banks are really just intermediaries. They're connecting lenders and borrowers. So taxi companies, real estate companies, property management, and yes, banks. Anywhere you've got sellers and buyers or lenders and borrowers, they're being connected, that are being collected for economic rent. Those industries are at risk. So again, if you're going to compete, I'd say find yourself a fintech partner and get yourself efficient because, again, technology is eliminating all of the overhead, all of the cost, the big fancy buildings, compliance officers, the staff, all of that can be eliminated with software, smart contracts, whatever. And we're going to see a world where, again, the ones, if they exist, are going to look a lot like software companies. I tell our clients that, back in around the turn of, was it 1900s or whatever, the automobile when it first started to come out, all the horse and buggy companies got together and said, oh, this is never going to happen. It's never going to take off. Oh, there's not a whole lot of horse and buggy companies anymore. So again, don't underestimate the impact of these fintechs out there. Find yourself a good partner and get yourself become efficient. That's what I'd say.
That's great. Well, that's a great way to wrap us up. I want to thank all of our panelists. Thank you, Fran, Bhushan, Derek, and Larry for your time. As a reminder to everyone listening, you will receive a recorded version of this webinar within 24 hours. It will also be posted to bankdirector.com. So at this time, we're actually going to transition over to our peer exchange sessions. These sessions are exclusive to our bank attendees. So if you previously indicated that you would be joining these exchanges, we have broken you into small groups, and a unique link was sent to you on July 15th, and then also again this morning from Nicole Smith, who is a rock star on the Bank Director team. So you can go ahead, pull up that email, click on that link, and that will put you in your peer exchange group, which will be starting right now. Thank you all.
Thank you. Thanks for having us.
Thank you.
Thank you.